a data dependency question. Has there been a prioritization of market data over the economic data? How do you balance those two things?
I would say that our mandate is maximum employment and stable prices, and that's about hard, real side economic data. As I mentioned earlier, our tool, our interest rate tool operates on the economy through financial conditions. So financial conditions matter, and they matter in the way that I suggested earlier, which is to say broad financial conditions changing over a sustained period, that has implications for the macroeconomy. It does. So if you lower interest rates and they stay low, every borrower in the country ultimately has a lower interest rate. That'll have an effect on, over time, an effect on the economy. So, but again, the entire focus we have is on maximum employment and stable prices, not on any particular financial market or financial conditions generally.
And last question to Miles.
Thanks. Chair Powell, Miles Udland with Yahoo Finance. I would just ask, I guess, about the balance sheet in general, and are you surprised at how much of a conversation we're having around the balance sheet and how much talk about the balance sheet from yourself and various Fed officials have moved financial markets? Because putting out a statement clarifying your view on the balance sheet is somewhat surprising, considering it is restating what the Fed had said all along was the goal with balance sheet normalization, to roll it off, not have it be a key part of policy. And so I would just ask, are you surprised by kind of how far that conversation has gotten just in the last 6 weeks?
I'll quickly go back. In 2017, we were, in designing the normalization plan, we were concerned at not having two active tools of policy. We learned during the taper tantrum, frankly, in 2013, that would be confusing to markets. So what we did was we set up the normalization of the balance sheet in a way that was very transparent, so that you could look and know, really, certainly as to Treasuries, pretty much the exact amounts and the timing in which we would be returning these assets to private hands. And we put that out there very publicly, and in the hope that it would be priced in and understood, and that then we could put the balance sheet on the side and have interest rates be the active tool of policy. So that went along that way very well, and I think that division of labor was a good one for our policy and for the benefit of the country. I think that I think the market is now looking for more clarity around that, and I think it will be providing it. That's what's happened.
Okay, thank you.
Thanks very much.